Hello and welcome. My name is Brian Kaplan. I'm editor of the Banker magazine. We're at the annual meetings of the IMF World Bank in Washington, and I'm talking with Philip Larraín, who's the Finance Minister of Chile. Welcome, Mr. Larraín. And
Thank you very much.
Obviously, over the last few weeks, the whole world's media has been focused on Chile for this dramatic rescue of the miners, and it's looking now as if you're very close to a positive conclusion. Can you give us a bit of a feel for what sort of psychological trauma the country's been going through over these weeks?
Well, after the initial accident, we thought we didn't know for a while whether the miners were alive or not. But since the beginning, it was also clear that the company was unable to help them. This was a company in very, precarious economic situation. So what we did, all the country was, looking at the miners, whether, they were alive, and we were all expecting, and ours is a very religious country, so we were all, most of us were praying for the miners. And so in the end, when we got the idea that we were alive, and that the 33 were alive, with this piece of paper, that they got, the first time we were able to reach that point with a very, a narrow instrument, but then they attached this document saying, we are fine, the 33 of us, only that. And that was very special. And I think that took the attention of the whole world, and first the initial accident. And we've had experiences of accidents, elsewhere, which unfortunately have ended quite tragically. So the fact that these guys were alive, first, the whole country, 17 million people, not only their families. And as government, we've been, all this time, with no political calculations since day one. We don't know whether they were alive or not, and we went with all the resources to try to get there. And we had 3 different plans to get there. And one of the plans broke yesterday, and isn't, so we're in the process of probably getting these guys out, and with tremendous joy for their families, for the country. We've been all focused on the miners, so it's a great thing.
Okay, so it's good to have a positive resolution to that.
Absolutely.
And it has been a very challenging time for the country over the last couple of years. Obviously, you experienced the fiscal crisis like other countries, but you also had the natural disasters. And but now you've had a report from the IMF, which is all looking rather positive, and your growth looks as if it's going to be 5 or 6%. Are you feeling confident that you're past the worst now?
Yes, definitely so. I mean, the first thing is last year we had never a fiscal crisis, but a recession. We had a very, 1.5% decline of GDP, and as part of the world recession. But in Chile, it was slightly worse in the sense that, the average decline for the world economy was 0.6%, and in Chile was 1.5%. We lost almost 50,000 jobs for the year. Well, that's a long, that's a heavy loss of jobs for our country, a workforce of about, slightly over 7 million people. So that was the situation last year. When we were in the recovery phase, starting to recover, then we had the blow of the earthquake and the tsunami that followed, which cost us, first of all, the tragic loss of over 500 lives, and then an economic cost of about $30 billion in estimated damages. Well, that's over 16% of our country's gross domestic product. So after that, our efforts have been first on going over the emergency and then on the reconstruction part. We have been able to surmount the emergency phase. At the beginning, the country was not completely connected. Transport was, at some points in the country was broken. Some localities were isolated, because of the earthquake. And now the country is back to normality, and we're in full reconstruction. We have had 4 months, actually 5 months of very positive growth after the earthquake. So, our country is growing now over 7%. So that is a good news, and it's part of the reconstruction effort, partly because we have a low base, and partly because of, we believe because it's also the fact that we've been able to recover expectations and people trust in the economic policies that we're pursuing.
Now, the IMF's report was generally positive, but it was critical, I think, of the fiscal rule that you've had, or not exactly so much of the rule, but of the lack of transparency of it. And I think it's something that your government has been looking at anyway and set up a commission to have a look at.
That's right. Well, I mean, we have been in essence, this fiscal rule, what it allows a country is to do counter-cyclical fiscal policy, but according to a rule. And the rule says that in good years you save, in bad years you can dissave. It's a very simple thing, but, carried to public finances means that you have a structural surplus or structural balance to which you aim. And that structural balance was broken last year, and we set up this commission.
Because of the severity of the situation.
Not only that, but because there were some changes in the criteria that were applied to several of the parameters of the fiscal balance and some accounting things that. This commission, that includes two people that were budget directors of the Concertación government of the current opposition, gave a unanimous report saying that we should revise the rule and make it more transparent. So first, what the IMF said, not only positive about the economy, but also commended the fact that we set up this commission, and that we adopted the recommendations of the commission to make more transparent the rule. If we want to be more counter-cyclical, we will put it in the rule, but not, we will revert the changes that were done in the last couple of years. So that's, now we're starting from a structural deficit of about 3% of GDP, and we are committing to go to a structural deficit of 1% by the end of our term, in spite of the fact that we have the reconstruction effort. So that puts us, under a strain in terms of the need to reconstruct the country, carry forward the economic program that we promised, our citizens when we were elected, and third, to consolidate the fiscal situation. When I say these numbers, Chile is a net creditor. The Chilean public sector is a net creditor, about 10% of GDP vis-a-vis the rest of the world. Our gross debt is 6% of GDP. I mention this because, of course, we have our own issues, and we're trying to improve, but our situation, our fiscal situation, if you compare it with the rest of the world, is very exceptional.
Now, one of the results of having a strong economy like that and a good fiscal situation is that you tend to attract hot flows of money, and we're seeing this in other countries around the world. Brazil's got a big problem with it, and that then usually leads on to an overstrong currency, and then after that sometimes calls for capital controls. Are you concerned that you may get into that cycle?
We're doing several things to, in a way to avoid an unnecessary appreciation of the currency. We are concerned about the situation because an appreciation, what it does, it's not so important for the mining sector. The mining sector, is booming because of the price. So for them, the exchange rate is not such an important part of the equation. When copper prices are close to $3.80, per pound, $3.80 per pound, at the depth of the recession, they were $1.40, $1.30. So, that's the kind of recovery in the copper price. First thing we're doing is we're slowing down the pace of fiscal spending. We are in the consolidation phase of fiscal policy. So we are reducing the pace of fiscal spending below the growth rate, the expected growth rate of GDP. We just unveiled the 2011 budget, and that contemplates an increase in spending of 5.5%. And estimates are between 6 and 7 for the next year. 6 is in the low end. That's the IMF's number. Some private analysts are forecasting up to 7% output increase. So that's one thing. The second thing is when we have to finance our financing needs, we go to several sources, not just selling dollars or placing a bond in the international markets. We do that, but we do many bits and pieces here and there, so we don't disrupt the exchange rate. And if you bring, several billions of dollars and you sell all the dollars, we do have a sovereign fund, but the sovereign fund was not intended for reconstruction. Is to, be able to offset, price, cushion, is to linked to the copper price. It's able to cushion the international cycle. So that's why this was set up, not as a reconstruction issue. So we want to use very limited way this fund, and then we did something that a center-right government is not expected to do, which is raise taxes. We raised taxes, mostly transitorily, but some permanent, because this was unexpected, the earthquake. The net cost for the government is, over $8 billion, and we need to get some part of that from tax revenue, in order to be responsible, not just spending and increasing the deficit due to the earthquake. So that was the second part, the spending, the financing, And then we're doing some things to increase the usage of different coverage mechanisms like options, futures, forwards for companies, and especially for medium and small businesses who don't use much these instruments to cover against exchange risk. On top of that, through the state bank, we're making available for small and medium-sized business some, dollar loans.
Okay.
Whereas previously, if you're an exporter, you get your income in dollars, and then you get your liabilities in pesos, and
you're done.
And liability, and then when the exchange rate appreciates, you have a problem.
And this is the first time the government has embarked on that sort of extensive measures to help small businesses like that by trying to hedge the currency or help them hedge the currency.
Well, these are the measures we're doing right now. There is another issue. We have a floating rate, and because of that, the floating rate is managed by the central bank, as it should be, and they may or may not decide at some point, in a particular circumstance, to intervene. The central bank over the last 10 years has intervened 3 times. They have been mainly massive interventions, not just a small intervention. The central bank has not decided to do it yet, though, well, who knows what the future would lead. So I think that that is an option, and capital controls we're not considering. We had an experience with capital controls, and we don't think it's the right way to go.
Okay, and you mentioned there about the wide range of financing sources. You did place a bond 2 or 3 months ago, and that was the first time, I think, since 2004. And these were the tightest spreads since the beginning of the 19th century. What does that tell you about how far Chile has come in those last couple of 100 years?
Well, it's a good thing we did this investigation, looking back at all the country emissions, the republic emissions, and the first one of after independence was 1822, and we placed that one at 9.9%. So we had many bond emissions in the international markets, beginning in London and then going to New York. And then we were absent from the market for about 70 years, since the Great Depression till the late 90s. In 99, we went back to the markets after having been absent from the markets. And we stopped that in 2004. When we came in, we said, well, 2 things. First, we need the resources for reconstruction. Second, we want to provide a good benchmark for the Chilean companies. We went and did a double emission, 1 bond in dollars and 1 bond in peso. $1 billion were placed at 3.89%, 90 basis points over the treasuries, and that was the lowest rate in the Chilean history. So I think that was a very positive view. But on top of that, we placed a 10-year peso bond at a nominal rate of 5.5%, and that reduced local rates. And it was a very good thing, and it's part of our process of internationalization of the Chilean peso.
Okay. Thank you very much, Minister.
Thank you.
Well, you heard a very positive report from the Chilean Finance Minister there on the economy's progress. And very interesting, I think, that he ruled out any idea of introducing capital controls, which has obviously been an issue at discussion at the IMF World Bank meetings here in Washington.